This is our Forex blog for September 20th, 2012. And like we do most days, we use our currency meter as part of our three-step easy Forex trading system to identify the strongest currencies to buy and the weakest ones to sell. Once you sort this from strongest to weakest, you can see the New Zealand, Australian, CAD, and pound are the strongest. The euro and Swiss are the weakest, then the yen, then the dollar right now. The real-time trend is on the top. This is made up of multiple different statistical tools that measure both direction and intensity. So it's just like, in football, if you have a 300-pound guy running as fast as can be at you, he's going to run you over. Whereas a 50-pound guy running the same speed won't even affect you if you're a normal-sized adult. Or a 150-pound person running at you with twice the speed will have the same, force. Force equals mass times velocity, and it's the same way in trading. If the majority of the New Zealand pairs, let's just say the New Zealand's going up against 80 to 100% of the pairs underneath here, and it's doing so with 150, 200, 300% more intensity. In other words, each bar is moving 1.5 to 3 times more than it normally does for this time of the day. Then that's a trend that's likely to continue. So underneath the real-time trend, which is made up of multiple different tools averaged together into one reading, we have the 15-minute trend, hourly, daily, weekly, monthly. And you can see when the longer-term trend is up and the real-time trend's up, it's only a matter of time before the hourly trend shifts up. You want to be buying this against the weakest ones. Today, the Swiss, the euro, also the yen here at 10 o'clock. Notice at 10 o'clock, this one really didn't have that much weakness leading up to 10. This is one of the pairs that I leave running overnight, so we'll take a look at the New Zealand yen. This is one that we'd want to be buying around the 10 o'clock time. Here's the 10 o'clock. You can see it pretty much went from 64.30 to 64.90. Nice 60 pip move, just straight up. And the buy signals, if you are a new trader, give you an idea of what a high probability trade looks like. Let's look at some of the other ones that you could have been taking. The Swiss and the euro were weak, especially earlier in the day. So, at 3 o'clock, buying or selling the weak euro versus a New Zealand would be one trade you'd take. Let's take a look at that. And if you're at one of those brokers that doesn't have low spreads on some of these more exotic pairs, you can always trade it longer term by using one of our tools that I'm a huge fan of and I'm putting into our trading signals. They work so well. This shows you where the previous 4-hour period's point of control is, and that is the most actively traded price during the previous 4 hours. And then it shows you the upper and lower value areas where the price spent 68% of its time in between that point of control. So above that point of control, you want to look for buys, and underneath it, you want to look for sells. So during the 4 o'clock period, it opened up pretty much. You always want to be a little careful right at the beginning of every new period. It broke down underneath it, came back and couldn't get above it. Very high probability place to short, and it went down. Notice the same thing happened during the next 4-hour period. This was the most actively traded price for the previous 4 hours. And it does act as support resistance. Look at that. From 8 o'clock last night to midnight, this was the price most traded. As long as price is above that, it tends to go up, and it acts as support. The next period opens, it finds resistance right here, and that gives you the go-ahead to sell it and to sell it. It's as easy as that. Let's just randomly pick a currency, euro dollar. A lot of people like to trade that. This is generated by tick data, so it has to download, sometimes 100,000 different trade prices. And you can see it starts the day off underneath the previous 4 hours average price, and even underneath the previous 4-hour period's value area low. So that's, telling you basically to look for sells starting the day off in the euro dollar. The next period opens, and it's above the point of control. Now this has already fallen a decent number of pips, about 80. So I'm not so sure I would have sold this one right here because it doesn't have that high more potential room to go. But if you did, once it gets underneath that value area and it comes back up underneath the value area low right here, you would get out of that trade with a small profit. And because the trend's down, it opens the next period above there. When it breaks down right here, you go short. You can see it fell about 20 pips. found resistance there, you might have gotten short and maybe made a little bit. You would have shorted here and lost a little bit. And there's a lot of tools we have that once the market stops making lower lows, if it's above the value area, you might buy right there or this breakout here, and you have your fib target off of the previous wave to use as a profit target, and you would still have a trailing stop in this. You'd be up about 15, 18 pips with 74 as your profit target. Either your trailing stop gets hit or your target gets hit. So let's look at some of the other trades today. The dollar was strong on all time frames except the monthly. And anytime you see some real-time momentum come in, it's extremely strong, followed by a very little amount of weakness during the pullback. Usually that trend will continue, and it didn't for about 40 minutes, and then it did for an hour and a half. The dollar was strong. So at 8:30, when this got strong again, what was the weakest one? It probably was the CAD. So if you're watching the dollar CAD coming up to 8:30, let's take a look at this. Here's 8:30. It's above the hourly moving average. As I zoom out, you'll see the point of control of the previous day. Anytime it's above that, it's more likely to go up. And here is 8:30. It has a nice little sideways rectangle pattern. And I like rectangle patterns that are anywhere from 30 minutes to 2+ hours. So this one started really at 7:40 and it ended at 8:36. So more than 30 minutes. It breaks out, and you can see our trailing stop got you out right here at 07. You're in this trade at 93. You made 14 pips. But the key is anytime you think about trading, it's not winning percentage, although everyone wants to be 60, 70, 80% winning. The key of the trading is to have small losses. So if you're in here at 93 and your stop is at 86, you're risking a maximum of 10 pips. If you have the widest spread breaker on the planet, you're risking 10 pips here, and it went up again. 07 went up 14 pips while risking 10 pips. So that's 1.4 times bigger profit than what your risk is. And we're always working on improving our signals. Let me just showcase how the new signals are going in some of these pairs. Every day I look at the code and make sure that all the good trades, and I use this on a range bar chart. So for example, 5 pips per bar. We'll bring up the dollar CAD to show that one first. And I pretty much use these signals along with a displaced moving average using our new digital signal processing based technology. So if you put a 5-period moving average shifted 1 or 2 bars to the right, click DSP, makes it very fast. Once you get a buy signal, wait for a bar to close above there. So you would have actually, went long on this one right here at 89, and your stop would be underneath this bar's low. Your stop would be right here. It went up 1 bar, and then it came down. And typically when that happens, I move my stop up in half, so you would have lost 4 pips here. And because the trend is so strong, if you get a buy signal like that, typically I'll give it another shot and buy it again right here as soon as it goes above that next bar. So let's say we lost 4 pips here. We went long again here. This one went up and then closed underneath here. So let's say you get out here at 91. You made 3 pips on that. You're down 2 pips. So here's the next buy signal. Here's the first close above the displaced moving average. There's your stop. It goes up and then it comes down. I'm moving my stop underneath that bar pretty much right near break even. And then it goes and takes off. You always got to be aware of where the previous swing high is. And, it pretty much went up there and it left a wick. These wicks on range bars tend to show when a trend is over. You can see the end of that move was here, here. It stalled and it reversed a wick and went up a little bit, 5, 6, or 5 pips. These are 5 pips per bar chart. This last trade you're in at this price right here, around 85. If you're out at 05, you made 20 pips. So between those first 2 trades, we might be down 3 to 5 pips max. You made 20, you're up 15 pips. And then here you have a buy signal. You would have got long here. You would have lost about 6 or 7 pips there. And obviously, using our real-time tools, you might not have bought this when it pulled back, but you would have had another loss here. And even though this is probably a horrible example compared to how this works on other currencies, you pretty much made a few pips on it if you count them all. Let's look at some of the other pairs. Here's, the euro dollar that most people like to trade. You got two sell signals right here. The first close underneath that bar, you would have had about a 6 or 7 pip loss. You get short again here, made 5 pips. Shorted again here, made 5 pips. And typically when currencies are going up like this, you always want to draw your fibs on there as well. Typically 38% pullback is going to be a decent place to get short. That's right here at this level. This is a little bit higher risk than selling right near the 38 or especially the 50%. But by using the displaced moving average, you can make a few pips, and then you're short here at 79. Let's say out here at 48, you made almost 30 pips on that case. Just those few trades right here, you're up 35 pips in the euro dollar. And this is still a work in progress, but it is finding some very high probability trades that you can make even higher probability by just simply using the fibs, waiting for a decent 38 to 50% pullback. Here's the euro yen. You can see it found a profitable trade here. This one right here, short at 53, maybe out here at 21. It picked up 30 pips. Trend, you have some trend trades here. It really went underneath this bar here. Be short at 45, maybe out at 36. You only made 8 pips. Maybe you made 5 pips here. Shorted this at 54, maybe out at 25. So that's 30 pips. It made a fortune in the euro yen. And once it moves below our statistical range low, and you can add our range projection on here, put in 1440 minutes, which is a daily amount, and this will show you how far the market normally moves in a day. And this is the average statistical low. Typically underneath, right near the average low, you can sell, but once it gets farther down underneath there, you don't want to take sells. This is code I'm putting into this trade alerts in the future that will get rid of this trade, in this trade, this one, this one, this one. It might have shown this one and this one. But underneath the standard average daily low, the market's down too much. I mean, that's how much it moves in a normal day. If you add one standard deviation on here, underneath the one standard deviation low is a very risky sell. So this one right here is very risky. This one and this one is very risky. This is a little bit less risky, a little bit less risky, and this one is right near that, so it would be very risky. If you just simply add that to your chart with these signals, you can improve your accuracy. And plus, if you use our real-time tools as well, you also improve your accuracy. Let's bring up the euro yen on the chart. As you look at this, you can see Fibonacci profit target here and here. This is our 3.0 containment band. Typically, at or underneath the green 3.0 band, you're going to get a reversal. So this trade right here, you're watching it like a hawk. You're out. You probably would not have taken some of these trades if you had the containment bands on there. In my development studio, I'm still putting in all trades just to make sure they show up, and then once I have them all show up the way I want, I'm going to try to remove the riskier low odds trades. If a currency is down statistically too far, it's a low odds trend trade. And I haven't even put in code yet that finds the counter trend trades. When I do, and when we add the range projection to the programming language, it's going to be looking for a buy here that would have been a loss, another buy here that would have been about a 40 pip win, more than likely a buy here with a loss, buy here with a small win, buy here with a third 20 pip win. When it's underneath this statistical low, it's going to be looking for counter trend buys because it's more likely to reverse. And you can see that's what happened. Boom, 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 boom. Pretty much every time it made a move down there, it reversed. And if you're a little bit skittish for counter trend trades, you can always use a little bit longer term moving average. Instead of a 5-period moving average shift to 2 bars to the right, put a 20-period with no shift. And I always like the white. They look better on a black background. It will help you find very high probability. You can see how fast this moving average is. It comes down here. Here's your first close above it. It goes up. You have a small profit here. You're in here, maybe out with break even or small loss. and again here, made 15, 20 pips. And there's so many different ways to trade with our software. Trade in the ways that's the highest probability, and that's why I'm completely rewriting, you know, the signals to have an improvement on accuracy. And I haven't even put in the rules that prevent selling a currency that's down statistically too much. I'm not looking at these Fibonacci profit targets. Typically, when you have the Fibonacci 1.618 fib target, I do these each night. This is likely to be the max low. And it did, I was a little bit off of my projections. It did go about 15 pips lower than that, but it pretty much stalled underneath, right near my second fib target, and tried to make counter trend moves. So there's a lot of additional code I need to put in there, but I'm going to be releasing the first draft of this completely rewritten FX trading signals probably by the end of next week.